I only do seller finance deals. You've probably heard this from internet gurus out there, but what about the millions of properties that are out there that are not owned free and clear by the seller where they cannot do a first position mortgage? Well, in this environment over the past 12 months, I've seen the most amount of creativity and sellers actually collaborating with buyers on killer creative deals. And this is how I'm doing it with clients. When you can get the seller most of their cash at closing by using bank financing and then also having the seller hold a second mortgage. This sounds completely foreign and completely almost like it was like a taboo in the commercial transaction space, but this is how deals are getting done in this climate. I did a case study with a client on how he locked up a $1.3 million deal. The seller agreed to take back $300,000 in secondary financing, which the bank was cool with. And I go into this in the exact training on how to structure these deals so it's good with banks. And by doing so and blending his cost of capital down, it allows him to raise half the amount of capital he needs to do for the actual deal from $300,000 or $400,000 to about a little bit about $100,000. So it allows him to raise the capital much faster for the deal. And also, oh, by the way, it allows him to juice his cash on cash rate of return from 9% up to 22%. So I'm going to go into exactly how this works and the caveats to watch out for a little bit as a little teaser on the 16-minute video I posted up on my YouTube channel. This is an actual live deal that I worked on with a client that we got locked up in a contract. And you can see this $1.3 million deal, he would have to raise $415,000 for this property, which is not a huge raise, but you can see what this does on the cash on cash rate of return is about 9.93%. But if we integrate seller financing like we negotiated this deal at 5% interest only for 5 years, you can see what this actually does to the underlying financials. One is it decreases the amount that he has to raise it to $115,000, so far less people to raise capital from. He can easily cobble this together from 4 different investors putting in $25,000. And also you are able to increase the cash and cash rate of return from 9% to 22%. So you can very easily offer a 12% rate of return guaranteed by you, the buyer, to make the capital raise that much easier. So if you want to learn about the exact framework that I use, the 3-offer framework, and how I get past the gatekeeper, which is the broker. And by the way, brokers listening on this, you're going to want to know about these tools as well to get more transactions done this year. Comment finance below, and I will send you the entire training.